So as we'll be looking at this question, I'll be explaining on how we can be able to treat some adjustments, including those that may not be there. Okay. So the question reads, Renata Gata is a sole trader operating as Renata Gata. And the following is a trial balance as at 31st March 2005. I hope my screen is visible.
Yes.
Okay, so fixture and fittings, we have got 22 million. Then accumulated depreciation for fixture and fittings, that's 9 million. Now, when we say accumulated depreciation, what we are basically saying is that from the time the asset was bought until the time that we'll be preparing these statements, it has lost value of 9 million. So for us to know the value of this asset as of the period we are preparing the statements, we need to subtract the 22 million minus the 9 million to get the value of this asset. Okay, that is 1st April 2004. Okay, then there we have got the purchases and the sales. So which one is the purchases there and which one are the sales?
The purchases are 16 million. Then the sales are 42.
42 million, huh? Okay.
Yes.
Then we have got receivables and payables. Receivables, it is 2.4 million. Payables, it's 1.6 million. Is that clear?
Yes, sure.
Then next, we have got opening stock, okay, which is 1.2 million. Then we have got wages and salaries, which is 13 million. Then balance at bank, which is 2 million. Then we've got the returns there. Now on the returns, we have got returns inwards and returns outwards. Which ones are the inwards and which ones are the outward?
The inward is 800, then outward 1.160.
Okay, so inwards, it's on the credit side. Then outwards, it's on the, inwards is on the debit side, then outward is on the credit side. Remember, outward it's going out, so it's been debit, it's been credited. Then inward it's coming in, it's been debited. Is that clear? So the
yes, it's clear.
The 800,000 is the inward. The 1,160,000 is the outward. We continue. Discounts also. Okay. Which one is a discount allowed and which one is a discount received?
1.8 million is the discount allowed. Then 1.44 is the discount received.
Okay, so the received is an income and incomes are credited. That's the 1.44 there. Then the allowed is an expense and all expenses are debited. Then rent and rates, we have got 4.8 million. Then delivery cost, 2.6 million. Then we've got heat and light, 3 million. Then we've got the general expenses, 2.2 million. Then we have got provisions for doubtful debts, which is 600,000. Then I've got a long-term loan, which is 6 million there. Then we have got a capital there, which is the 10 million. When you add your debit side and your credit side, it's supposed to be equal, giving us a 71,800,000. Now, there are adjustments after these questions, which we describe as additional information. The question goes further to say, you are given the following additional information. Take note. The value of stock at 31st March 2005 was 1.5 million. Okay? Meaning this is the closing inventory. Now, take note also, number 2, a bad debt of 420,000 was written off. Meaning, you had people who are owing you. Okay? Then from those debtors that you had to write off this value because you are not sure whether those people are going to pay you. Okay? So they are a bad debt. They are not going to make a payment. So you write it off as an expense. So if you write off that value, take note that it's going to reduce your debtors.
Yes.
Reduce your debtors. But if this value was already in your trial balance, that means the data that would have included there would have been the reduced debt, the value for debtors already. But we don't have this value for bad debts in our trial balance. Then take note also, these ones you have written them off because they're not going to pay. The question continues to say the provisions for doubtful debts was increased to this. Now, apart from these bad debts, there are also others that you may doubt, okay, of paying. Remember, in our trial balance, we had a 600,000 for those people. Then we are told it had increased to 980. Okay, so I'll explain how we treat these things when we are solving this question. How do we deal with an increase? How do we deal with a decrease also? Is that clear?
Yes, it's clear.
We continue. Now, number 3, the balance for rent and rates in the trial balance, okay, includes a payment of this much. Now, if you look at rent and rates, okay, we're at 4.8 million. Now, they're telling us that in this 4.8 million, okay, we included the payment for rent of this much. And that rent was going up to what? Up to June 2005. Is that clear?
Yes, it's clear.
Yes.
Okay. So our books that we are preparing, they're going up to 31st March. So meaning the payment,
Yes.
also it catered for what? It catered for April. It also catered for what? For May. And it also catered for what? For June.
June.
Is that clear?
Yes.
Okay. We'll come back to this. Let's continue. A bill of of 360 for heat and light for 3 months. Okay, 3 months to April 30th, 2005 was received in May. Okay, was received in May. We also look at this, that's 2005. Adjustment number 5, Lanada made a cash drawings of 3.2 million. Now follow me very well. 3.2 million. Now these have been included in the wages and the salaries in the trial balance. So what do we do there? This is very simple. You are going to deduct this because it is treated as an expense. So you subtract the 3.2 million from the wages, not so?
Yes.
Wages and salaries. Okay? Then you treat this as what? As drawings. Because these are cash drawings. Remember, drawings are either goods or funds that are taken from the business for personal use. We continue, number 6. During the year, Ranada also took for his personal what? Use stock which cost this much, 340,000. This is not reflected in the trial balance. So, how do we treat this adjustment? Remember, our drawings are going to increase by what? By that value.
By 340.
Okay, but what is it that's going to reduce? What is it that's going to reduce?
What is going to reduce is the salaries and wages.
No, number 6.
Number 6.
Hey, the question says is stock, right?
So stock will be reduced.
But how do we acquire stock?
Through purchasing.
Yeah, so it's not a stock that's going to reduce, it's a purchases. Because in American stock, when stock is here, it reducing. Opening or closing. So the purchases reduces by that. So whenever you take goods from the business for personal use, your drawings increases and your purchases is going to do what? To reduce. I hope we are together here.
Yes.
Yeah, we're just sampling it out. We'll look at these things in details. Number 7, the long-term loan, which was taken on 1st April 2014. It is to be paid in full, okay, at the end of 10 years. The interest is charged at an annual rate of, okay, of 800,000, and it's paid in arrears on 1st April, meaning it's paid at the end of the what? At the end of a period. And arrears, that basically tells us that it's an owing,
Yes.
Okay. So take note, the annual interest is 800,000. Number 8, fixture and fittings depreciate using straight line method. They are expected to have a lifespan of 15 years and a residual value of this much. Excuse. So I'll explain also the two types of depreciation, how we calculate them, and so on, just in case you come across different types in another question that you'll be looking at. Now, required. Prepare the statement of profit or loss for Renada Ganta for the year to 31st March 2005. The number 2, statement of financial position as at that date. Okay, so I'll assume that we know the pro forma and everything, as we just have to look at what is important. Okay. So we'll start from here. Of course, we know title is very important. So statement of profit or loss account. For the year ended 31st March 2005. The statement that you write, how many columns does it has? Hello?
Hello?
The statement that you write, how many columns do you write?
Three column.
Oh, okay. I was asking because I wanted to do something that you are used of. I've told people, have told me, no, us we don't use that format. We use a different one. Okay. So we'll start with our sales, huh? So sales revenue.
So which one is easier, having the 3 column or the 2 column?
Me, I looked at the 3 column to be easier, because at least you are able to do some nitty gritties in the first column before you push in the second column.
Okay.
Mm-hmm. So, like, of course, when I'm looking at the sales revenue, I know that sales revenue is supposed to be in the last column. Okay, but now in this case, our sales revenue has got some returns. So it basically tells me that I'm supposed to put it in the second column, then do the calculations for the returns. That's when I'm going to push it in the last column. So if you look at our question, our sales is 42 million, not so?
Yes.
Okay. Then sales returns.
It's 800.
800, right? So 42 take note, I've rebased the zeros. I'm going to say returns inwards. What's the difference there?
Supposed to be 41,200.
So it's called net sales, or in other books, they call it as the turnover. That is 41,200,000. Questions?
No question.
Okay. So we'll now say less cost of goods sold, the so-called cost of sales. Now, what do we start with here? We're supposed to start with our opening inventory. Meaning the inventory at 01, 04, 04. What's our opening inventory? This one here.
1,200.
1,200.
Then also our purchases, we have the 16 million there, not so?
Yes.
So now, whatever I'm going to write under cost of sales, it's supposed to come on the middle, unless that transaction has got some calculations, okay, before it is taken to the middle. For example, let's assume that purchases has got some purchases returns. I will do them in the first column before transferring the difference to the middle. So here, our opening inventory is 1,200 when you rebase. After we do that now, we have got purchases. And of course, we know that our purchases has got some purchases returns. So our purchases, we say, is 16 million. Then we can also say returns outwards. Returns outwards, we're able to see the 1,160,000, not so?
Yes.
Okay. 1,160,000. What are we getting?
$440.
440.
Yes.
16,000 minus 1,160,000.
Oh, 16,000. Oh, we are getting 14,840.
14,000.
840.
840. Now, if you remember very well, this person took some goods, huh? Adjustment number 6.
Yes.
Okay, so that one is going to reduce our purchases, huh? Okay, so it says our purchases is going to reduce, then our drawings is going to increase. So we say goods taken for personal what? Personal use.
Personal use.
So what would be the value there?
$14,500.
Okay, questions?
So for the increase of the drawings, we are not going to, it's not going to be inclusive on this calculation.
So which other one?
Yeah, I'm saying we have drawings increased by 3/4
So
and purchases reduces by 3/4.
remember, what do drawings do? Drawings, they reduce our capital. Now, how do drawings reduce our capital? Okay, I'll come back a bit. When you got your balance sheet, there's a section where you say equity and what? And liabilities. Okay, do we know that when we make a profit, our capital increases?
Yes.
Yes.
And when we make a loss, our capital reduces.
Yes.
Now, how does this happen? When you are looking at equity, your so-called capital, what do you start with? Remember, you start with opening, opening capital, your so-called opening net asset. Okay? Then what do? You add your net profit. You get a value there. Then once you get that value, you're going to say less drawings. Subtract your drawings, you're going to get what we call as your closing capital. Okay? So have you seen what happens? If these your drawings had increased, meaning they will reduce this value to get your closing capital, meaning your capital is going to reduce. But if you minimize on your drawings, okay, meaning your capital will increase also. Look at what happens. When your profit increases, your capital also increases. Why? Because you are adding that net profit to your capital. So it can give us your closing capital. I don't know if you remember, I've been seeing this question mostly. I think even in your test one it was there. Though here it was opening net asset. Then before you can add your net profit, you can also add your capital introduced if there is any. So that drawing that you are talking about there, sir, it's going to reduce your capital because it will come on your balance sheet under equity and liabilities. To be specific, on the equity section.
Okay.
Imagine you have got a shop, huh? When it's lunchtime, just send the kid to go and get something at the shop. It's supper, just go and send the kid to go and get something at the shop. By the end of the month, you discover that the shop will be on its knees begging because the capital has been chopped off by the drawings. Okay, we can continue now. Now, you are going to add your opening inventory plus your total purchases. Okay? When you add the two, what are we getting?
$15,700.
So cost of what? Goods. This one is called cost of goods available for sale, right?
Yes.
Which is the 15,000 what? 700. Okay. Please kindly take note. It's a continuation. I'm going to the other page. Now, when you get your cost of goods available for sale, at the end of the year, you need a stock. You do a stock take. Then you're going to find your closing inventory. So you would want to know the cost of the goods that you had sold. Okay? You can't start counting again. That would be sheer waste of time. What do? You just get the cost of goods that were available for sale, then deduct your closing inventory from this value. It's going to give you the cost of the goods that you had sold. So, in this case, we shall say less closing inventory. Meaning we are looking at the inventory at the end of a period, okay, which is 31st, 03, then 0 what? 05. We are told that the closing inventory was 15. I don't know if you remember. There on the note 1.
Yes.
Okay. Let me even do this. At least this will be helping us. This one is on note 6. Huh? Just in case you may be looking for it. This one, it's note 1.
So this question didn't have the carriage inward.
So this one didn't have the carriage inward. But now let me explain what carriage inwards are. You have, this is the firm. Okay? Then you have suppliers. Then you have got customers. Okay? So, when you buy goods from your supplier, these are what we call as what? Purchases, not so?
Yes.
So, these suppliers of yours, they have mentioned to you point blank that they don't provide transport. They're supposed to provide your own transport. So, the transportation cost that you're going to incur in ferrying your goods from the supplier to the firm, this is what we call as carriage what? Carriage inward. Okay? So other books are even going to call it as the carriage on purchase. So what we do is that whenever you have got carriage inward, it's supposed to be added to the purchases. It's part and parcel of your purchases. Is that clear? Please don't treat carriage inward as an expense. It's part and parcel of the purchases. Hence, it's supposed to be added to your purchases to find your total purchases. Then now, you who as a firm, when you sell goods to your customer, these you call them as what? As sales. But you don't want to act like your supplier. You want to attract more customers. What do? You even tell them, no, for a small radius, we are able to provide transport, okay, for the goods that we're going to buy from our firm. So that transport that you provide is the one that we call as carriage what? Carriage outwards. The transportational cost incurred in transporting the goods from the firm to the customer, we call it as carriage outward. This carriage outward, it is a cost that is being incurred in the day-to-day running, okay, of the company's operations. Therefore, it is treated as an expense. I hope that's clear.
It's clear.
Okay. Any other question before we forge ahead?
No question.
Okay. Now remember, on these same purchases, there are some other questions that you're going to find. Oh, for example, let's assume that you are coming from Dubai. That's where you go and order your goods. When you get to the border, there will be aspects to do with the clearing, not so. The paying of the excise duty, the customs duty. All those costs, you add them to be part and parcel of your purchases. Though very rare
Come
cases,
again.
very rare cases are going to see such types of questions. Okay? If a question contains customs duty, contains excuse duty, you also get those duties and add them to the purchases, the way we are adding the carriage inwards. I hope that's clear.
It's clear.
Okay. So here we can subtract. What is 15,700 minus 1,500?
14,300.
14,300. 15,700 minus 1,500. I'm getting a different answer.
You are saying 15,700
minus
minus
1,500.
it's 14,200.
Okay. So you're going to subtract that from your net sales or your turnover, so that you get your gross profit. What's the answer?
Come again. You said you should subtract
Remember,
or add.
we're subtracting your net sales minus the cost of goods sold,
Okay.
so that you can find our gross profit.
We are getting 27,000.
So that is our gross profit. Now, questions before we proceed?
No question.
Okay, so we'll have to check for some gains there. if they are there. Some incomes. Do we have some incomes there?
Mm, yes, we have.
Which is,
We have the discount received.
what's the value?
The value is 1,440.
Okay. So we have discount received. Okay. I want to explain something here. Not two. We are told that the bad debts we have there, and we have been told that provisions for doubtful debts was to be increased. Please, when you get to your incomes, work out this provision, because that provision, it can be an income and it can also be an expense. Okay, it's just that they have already explained that it was increased, so there's a word increase. At times they'll just tell you it was adjusted. Okay, it was adjusted. Maybe how much is our debt? Our data is 24.
Yes.
Okay, they will tell you maybe 40%. 40% of our data was the provisions for doubtful debts. So you have to check whether there was an increase or there was a decrease. So let me explain how you treat an increase and also a decrease. Right? Okay. Note. So an increase in provisions for doubtful debts is treated as what? As an expense. Okay. And a decrease in provisions for doubtful debts is treated as an income. Okay. So if you look at our trial balance, what was the provision for doubtful debts in the trial balance? We had the 600,000. Then it was increased to
98, eh?
yeah, to 980. So what was the increase?
380.
That's a 380. So this 380 is going to be expensed. Okay. So take note, the 380 will be expensed, this one. Then your receivables, please follow me. Your receivables will reduce by what? Is that clear? Meaning the people who are owing you, they're going to reduce by this. Now, let's assume that in our trial balance, we have got the 980. Then you are told that your provisions for doubtful debts was adjusted to 600,000. The question is, how was it adjusted to 600,000? It shows that from the list of those whom you are doubting that you're not going to pay, okay, some of them have paid, and that's why it has reduced to 600,000. Hence, therefore, if there's a decrease in provisions for doubtful debts, that shows that you have received some incomes. So that income that you have received is supposed to be added to your gross profit. I don't know if it's clear.
Come again. That one.
So I repeat my statement. Let's assume that
Yes.
in your trial balance, you had 380, which was showing, 980, which was showing as your provisions for doubtful debts. Then you find a note on the adjustment that your doubtful debts have been adjusted to 600,000. Now my question is, how did we get the 600,000? Meaning, on the list of the people that you are doubting that they are not going to pay you, they have paid something, and that's how they have reduced to 600,000. So what has caused the reduction is the payment, the income that you have received. So that income that you have received is supposed to be added to your gross profit as an income.
So in this case, it's 380.
Yeah. Questions?
No question.
Okay, so we can continue.
Yes.
So, but here we're not adding the 380 there because that 380 is it is an expense. It's not an income. So let's add there. What are we getting?
$4,140.
Punch it correctly. It's 27,000 plus
27,000 plus 1. 28,440.
28,440. Now we can go to expenses. Huh? less expenses. So what do we start with in the expenses? I think discount allowed. Huh? There is no need of calculating anything there, not so.
Yes.
Discount allowed, which is a 1.8. Then if you check on our notes, I think we had something to do with bad debts. Huh?
Yes, bad debts.
Bad debts written off should be note 2. Where the forward 420. Yeah, 420. Also, this one is going to reduce the debtors. Huh? Okay, unless it was already in the trial balance, but it was on the note. So if it is in the trial balance, the debt value that you're going to see in the trial balance, it shows that this has already been subtracted from there. So our debtors are going to reduce by a 420,000, and also the provision for doubtful debts. Okay, what other expense do we have? Remember our working? We said something should be expensed there, not so.
Yes, the provision for doubtful debts.
So which value are we expensing?
The 3.8.
3.8. So increase in provision for doubtful debts. Which is a 3.8. Okay. So what next?
We have the
Wages and salaries.
rent and rates.
Okay. Rent and rates also. Okay, let's start with the wages and salary,
Wages and salaries.
which is 13 million. Now,
Yes, 13.
this wages and salary, it has got an adjustment, not so.
Yes.
Okay, which was contained, and that was for drawings. Adjustment number 5. Remember, we are told that this person made some cash drawings during the year of 3.2 million. Those have been included in wages and salaries in the trial balance above. So, what do? You deduct them from the wages and salaries, and then you add them to the drawings. Meaning our drawings is also going to increase by the 3.2 million. Is that clear?
Yes, it's clear.
So wages and salaries, that is 13 million. Okay, I've entered here because I want to do that calculations. Then we have the drawings there, which is not what? Should be not 5,
5.
which is 3.2 million. What are we getting?
We are getting 9,800.
That's 9,800. Okay. We continue. I heard you mentioned something like rent and rates.
Yes.
What's the value?
The value is 4,800.
So here there is rent and there is rate. There are two things there.
Yes.
Okay. Rent and then there is rate. So altogether the rent and rates, they were 4,800. But there's some adjustments there. Okay. Adjustment number 3, where we are told that the balance for rent and rates in the trial balance includes, okay, it includes the payment of rent, which was the
For the
3.6
year,
million. So meaning in the 4.8, ile 4.8 to watch more idea. Okay. The 3.6 million is for rent. Then the 1.2 is for rates. I don't know if I'm getting the concept there. But now, this
the 1.2,
ni 4.8 wanze defyo. 4.8. Meaning the 3.6 is for rent, then the 1.2 is for rates. So there is rent and then there is rates.
okay.
Yeah. Now, this for rent, it was paid, okay, for the period going as far as the April,
June,
May, and June. So, meaning that payment was beyond 12 months, not so?
yes.
It was beyond 12 months. Is that clear?
It's clear.
So, we have April there, we have May, and we have got a June. Meaning it was for how many months?
For 3 months.
For 3 months, right?
Yes.
Okay. So we had paid in advance for 3 months. So the payment that we had paid in advance for 3 months, yeah, Nshinga. How much did we pay in advance for 3 months?
It was, we paid 3.6.
No, the 3.6 was the including of April, May, and June.
Okay. So we
remember, a financial year is a period of 12 months, not so?
yes.
So when we are
period of
paying
12
this
months.
money, we paid for 12 months.
Yes.
But the assumption that we'll take here is that we didn't pay on 1st April. We'll take the assumption that we had paid on 1st July. Because 12 months, yala kwanina mu June. 1st July to June is going to give us 12 months.
So
But
we paid 900.
Our statements, okay, our statements were prepared on the 31st March, meaning this value, it is including payment for April, payment for May, and payment for June. So the easiest is when you get this 3,600 or 3,600,000 divide by 12, it's going to give you a 300,000, meaning the payment for each month was a 300,000. When you multiply by 3, you're going to get the what? The 900.
900.
Now, that 900 that you're getting, it is what we call as a prepayment. Are we together? It was paid in advance. So it's not supposed to be included in the 1st April 2004 to 31st March 2005. Hence, it's supposed to be deducted from that value.
Okay.
So let me write a note there. Note 2. Take note. Prepayments are subtracted from their respective what? Expense in the profit and loss. But they are treated as current what? Current assets in the balance sheet. I hope that statement is clear. Prepayments are subtracted from the respective expense in the profit and loss, but they are treated as current assets in the balance sheet. So the rent payment, we are told that it was a 3,600,000.
Yes.
So if you do it like this, it's going to give us a 900,000. So meaning this value will be subtracted from the respective expense, and we're going to treat it as a current asset when you get the balance sheet. I hope it's clear.
It's clear.
Paid in advance. Please, we can also aim at balancing. I know people just focus on entries. Okay, next we have got delivery cost. What's the value for delivery cost?
Delivery
26,
cost 26.
That's 26. Okay, we've got delivery cost at 26. Oh, we continue. It's a continuation. Next, we have got heat and light. The value is 3 million. Now, when we get to heat and light, there is a note somewhere. Note 4. Are we able to see the note 4?
Yes.
So note 4 is saying a bill of 360 for heat and light for 3 months. Okay, to this much was received in May 2005. Okay, that bill was for 3 months. It was received in May 2005. What does that tell us?
Because our financial year ends on March 2005. Then we had to receive the bill that is on 30th April 2005, which means there is an accrual.
Okay, an accrual of how much?
An accrual of 36.
Okay.
360.
Remember, that accrual was for 3 months. Okay? Was for 3 months. Up to what? 30th April 2005. I hope you are getting the point.
Yes.
So how many months are we talking about here? The accrual will
So
be
here we are talking about 4 months.
How is it becoming 4 months?
Because we have to start from
No, it's supposed to be 3 months, which is mentioned here.
Yeah, it's mentioned for 3 months. Yeah. So now that 36 was for 3 months, which is going up to beyond our financial year. It's going beyond our financial year. I hope you are seeing that April is outside the financial year, not so?
Yes.
Yes.
And how many months is April? It's just one, not so?
That is one.
So
It's
now,
just one.
my question is, what would be the owing for April alone? Because the March, here we're talking about, remember, we're talking about February, March, and April. These are the 3 months we're talking about. So the March and the February is part and parcel of the heat and light cost, which is the 3 million. Because it is covered, it is within that range. We have only gone beyond for 1 year, for 1 month, sorry, which is April. So the owings that we are supposed to talk about here, it is the owing for 1 month, which is April. I don't know if it's making sense. This cost that we
It's
have,
making sense.
this cost that we have here, this one, it is for the 12 months. Okay. So what happened is the arrears for the 3 months, which was 3,600, okay, was received in May. But that 3 months, it goes up to April. So my question is, what was the owing for 1 month?
The owing for 1 month, then we have to do a 360 divided by 360 times 3 months divided by 12.
Why are you dividing by 12 when that value was just for 3 months only? Unless if it was for the year.
So we're going to do 360. 360 divided by 3 months.
Yeah, that's all. Or if you want, you can say 1/3. Now, before we can go to those calculations, take note of this. Owings, accrued expenses, outstanding, and due. They may use any of these terms, okay, are added to their respective what? To their respective expense. In the profit and loss what? Loss account. Okay, but they are treated as liabilities. To be specific, we're talking about current liabilities in the balance sheet. So in this case, what are we going to add here? We are going to say that the accrued expense it will be 1/3 multiplied by the 360.
360.
We're going to have the 120. So we'll go back to our profit and loss. And our accrued expense, when you add, what are we getting there?
We are getting 3,120.
3,120. Next, I think we've got the general expenses. How much are the general expenses?
General expenses, we have 2,200.
2,200. Then also let's take note of number 7. We've got a loan there, which will be paid in arrears. So it's also an accrued expense to be entered there in the profit and loss and also in the balance sheet. $2,200. Then we've got the loan interest. I think last but not the least, we have depreciation. Now let me explain on depreciation. Now we know that depreciation is the systematic allocation of what we call as the depreciable amount. Okay? Depreciation is the systematic allocation of the depreciable amount over its what? Useful lifespan, or estimated useful lifespan. So there are two types of depreciation. One of them is what we call as the straight line method. Now, this is straight line method. Here, depreciation is valued at what? At cost. What we mean when it says valued at cost, for example, you have got a percentage. You're going to say depreciation is equal to the percent that you have multiplied by the cost of the asset. If it is not this method, you can also use this one here where you say annual depreciation is equal to cost minus your residual value divided by the estimated useful life. Okay. Questions so far before we proceed?
No question.
So, like our question, we are using the same. The cost was 22 million minus our residual value was 1 million. Then our useful life was 15 years. So if you subtract there, what are we getting?
Is this 22 million?
22 million minus 1 million.
21 million
So
divided by 15.
1 million divided by 15.
$1.4 million.
1.4 million. Okay. Questions?
So these values, the 1 million, the residue value, where are you getting it? And the 15, the question.
Okay, let's go look at adjustment number 8. Everything is there.
The fixed and 15. Yeah, everything is there.
Okay. Let me talk about the reducing balance method. So our dip here is 1.4. But let me talk about the reducing balance method. So another method is known as the reducing balance method. So in this method, depreciation is valued at net book value. Now, what is this net book value that we're talking about? Net book value is a difference between the cost and accumulated depreciation. Okay, so for example, let's give you an example. If we are told that the depreciation was 10%, okay, so we would have said that annual depreciation is 10% cost minus accumulated depreciation. Now, my question is, what is the cost of this asset? Why the 22 million?
Yeah, the 22 million.
What is the accumulated depreciation?
She's 1.4.
No,
It's 1 million.
no.
1 million, eh? Okay.
Oh, we have 9 million.
9 million, huh?
Yes.
Okay. So the difference there is going to be 13 million. What's 10% of the 13 million? So 1.3 million. Questions? Okay, let's calculate the expenses there. Start from here. Are we there?
Yes, I am. Though James has dropped off. Huh?
Oh, okay. So let's add the expenses. So 18 plus 18 plus 420 plus 380 plus 9,800 plus 3,900 plus 6,000, sorry, 2,600 plus 3120 plus 2200 plus 800 plus 14. It's giving us total expenses of 26,420. Is that what you got?
Yes.
So we can now find our net profit. Net profit, we are subtracting our total income, which is 28,440 minus 420, sorry. Just give me a 2020.
Yeah, 2020.
Okay, questions? So me, the way I see these questions, if you do your profit and loss, the balance sheet becomes easier. You can even do it in 5 minutes.
Yeah.
Okay, let's go to our balance sheet. We see if our statement is going to balance. Pana James, welcome back.
Yes, yeah, I lost connectivity.
Oh, we thought that maybe you went for lunch.
No.
There's a class that I was teaching where there was this Indian guy. So what happened was that he was the only one who was contributing and saying answers in the morning. Until last he quitted, saying, "I know I can't be I can't be doing calculations on my own when ladies are busy eating breakfast." But how do you know that you're eating breakfast? Because you are in different locations. Uh, which balance sheet do you use?
It's the format.
Mm.
Uh, me in the test I used that one you taught us. Non-current assets, then just for 2 columns. That's what I used.
Okay.
But again, there's that one for 3 columns.
Where
There's that one for 3 columns, which has the cost, depreciation, and the net book value.
so that's what your lecturer was using?
Yes.
Oh, okay. Let me use the same. The reason why I ask is I taught that one. I taught a particular group, and the lecturer says, "No, this one is for grade 12s." Okay, so cost, accumulated depreciation, then we have got net book value here. So we'll start with non-current assets. There's only one there, which is fixture and fittings. What is the cost for fixture and fittings?
Mm, 22 million.
And what's the accumulated depreciation? Now remember, when you say
It's
9 million.
accumulated depreciation, we're even adding the depreciation for this year now.
That's one. Okay.
What would be the answer? 14 plus the 9?
It's 10 4.
That's 10.4. The difference what's the difference?
11,600. 11,600.
That's 11,600. Okay. We continue. We now go to our current assets. Here, remember, we start with inventory. Our inventory, we found it was 1.5. Then we have our trade receivables. I think we had this value as a 2.4. Now this value is going to reduce by some figures, not so. Remember, we did mention it's going to reduce by the 420, also going to reduce by the 980. Do we remember these adjustments?
On the receivables.
Yeah. Please, receivables is the one that we're calling as debtors, huh?
Or debtors. Okay.
Yeah, yeah.
So receivables are debtors.
Mm-hmm.
Okay.
So we are the bad debts written off. $420. Then we had provisions for doubtful debts.
980.
What are we getting there?
We are getting 1,000.
Okay, we continue. We have got bank balance. What was our bank balance?
Bank balance is 2,000.
Then
2
remember,
million. That is 2 million.
we also had the payment in advance. This one here, the 900.
It's the 39.
The 900.
Oh, 900. Okay.
So 2 million. Then paid in advance. $900. When you add, what are you getting?
$39.
You mean adding 1.5 plus
Oh,
1,000?
including one plus 1.5. Okay. 5.4.
That's 5.4. Then when you add to 11,600, what are you getting there?
$17.
Total assets, huh? As 17,000. Questions?
No question.
So we'll look at the last part now, the equity, and please, it's a continuation, huh?
Yes.
The equity and liability. So opening, we start with the opening capital there. How much was the capital? Our capital was 10 million. Then let's take note of our drawings. Huh? Drawings were got 3,200 and 3,200, then 340. Okay, to avoid coming back. So our opening capital, we have a 10 million there. Then we're going to say add net profit. Our net profit was 2020. When we add, what are we getting? That's 12,020.
That is 12,020.
So this is telling us that this would have been our closing capital. But the only problem is that we had some drawings. So the drawings, their job is to reduce that capital. Less drawings. So on our drawings, we had the 3.2 million plus the 340. When we add there, what are we getting?
We are getting three, 340. We are getting 3,540.
Okay, so when you subtract, what would be the answer there?
8,480.
8,480.
Yes.
Then you come to non-current liability, which is a loan. Our loan, if I remember, was 6 million. Then our current liabilities. How much was our data? The so-called trade payables. Payables. How much?
Payables, we had the 1,600.
Do we remember that we have got a loan that was accrued?
Yes.
800.
Yes,
Do we remember that
800
Yeah, 800. Yes.
we also had an accrued expense of 120?
of 120. Yes.
Okay, so take note. So payables 16, then accrued expenses and an accrued loan interest, then an accrued expense. So we had the 120 there and an 800. So when you add these, what are we getting?
We are getting 2,520.
2,520. So if you add this, it's supposed to give us this value that we have here. So let's confirm.
Yeah, it's giving us 17,000.
So it's giving us 17,000. Okay, remember what we are taught? We are told that assets supposed to be equal to capital plus what? Liabilities.
Liabilities.
Questions?
So if you want to make good use of time in the exam, so you have like this question for adjustment. So maybe solving it fast, for you have to take how many minutes?
In an exam,
Yes.
all the questions that you'll be solving, take note. You're not supposed to go beyond 45 minutes.
Okay.
But in as much as you'll be rushing, make sure that the answers that you're writing are accurate. Because others, in trying to rush, have ended up making mistakes and end up writing wrong things. It's better you write 3 questions and you know that these questions, my answers are accurate, as compared to write all the 4 questions when you know that you have made mistakes.